All right, what's going on, everyone? Let's do a quick sound check here on YouTube, and then a quick sound check over in the free room. And we are almost putting the wraps on another week. Some super strong stuff today. A quick glance at the board. Nvidia is up a casual 4%. Netflix up 3%. AMD up 3%. Tesla up 2.5%. ON, we got a little bit of that bad boy up 2.5%. Snowflake up 2%. QQQ up almost 2%. So very bullish action here today. And as always, guys, I'll be with y'all next Monday and Wednesday. And that's where we're going to jump a little bit into the current market and a couple of trade ideas. But for today, they wanted to bring me on and talk about emotions, trading psychology. So show of hands, who here has ever had a losing trade? I'm going to go out on a limb and say a couple of you. Every single one of us, right? And now here's the thing, losing trades. Here's, I think, a healthy way to look at it. Trading, whether you're doing part-time, whether you're trading full-time, you want to look at trading, you want to look at the management of your account is a business. Right? It's kind of like no different than opening up a bakery. Right? At a bakery, you got your expenses. You got to pay for your goods. You got to pay for your employees. You got to pay for your rent. All right, and every single month there's going to be those expenses. The goal, of course, is end of the month, you take what you made, you subtract the expenses, and you're walking away with a net profit. All right, as traders, our expenses, the COGS, so to say, the cost of doing business, it's the losing trades. All right, so one book that I want to suggest to you guys here before we jump in, and you've probably seen me suggest this book, time and time again. The Best Loser Wins by Tom Hugard. And there's a lot of good books out there on trading psychology. Definitely, Trading in the Zone by Mark Douglas. Right, that is definitely a classic. But what I took from this book here, Best Loser Wins, was really kind of reshaping the way that I look at my losing trades. All right, kind of shifting the relationship in more so the thought process and the action that I take. When I take a position and that trade starts to work, no, it's not working in my favor. It's coming against me. Now, when I look back on the losses that I can remember, like the real painful losses, the ones that really stung, the thing about it is those really painful losses, the trade was totally invalid, like way before it turned into a huge loss. Like whatever I saw on the charts, whatever the setup was, whatever the trigger for an entry, before that turned into a huge ugly loss, right? All of those things had already disappeared. The buy signals disappeared, the structure shifted, point being, way before I took that painful loss, way before it turned into a huge problem, all my reasons for taking the trade had disappeared. Right? And a huge part of that is just the that space between your ears. The human nature thing to do when a trade isn't working is to quickly start playing the justification game. Right? And we're really good at playing that justification game. I'm sure all of us at one point or another have done that. We take a trade because of ABC. Like, hey, I got a squeeze. I got some buy signals. You've got your triggers for the trade. So maybe you take that trade on Monday afternoon, and then Tuesday afternoon comes rolling around. All of those reasons have disappeared. That setup is no longer the same high probability moment in time it was on Monday. But we start playing the justification game. Okay, well, the trade's not working. All of my reasons for taking the trade have disappeared, but I've got 4 weeks to expiration. Right? I can give this a little bit of time, but, well, I've got to put credit spread. I only need Microsoft above 325 at expiration, and I'm going to make a nice profit. Like, we'll do a really good job of finding anything. to justify holding on to that trade when the setup is no longer valid. And one of my biggest goals coming into this year, and I really suggest, guys, like each of you should do this, because for me, this is like my 10th year of trading. I've never come into a trading season, like I've never come into a year with my number one goal being working on the emotional side of the game. I think by default, we're just way more attracted to the sexy stuff, the signals, the patterns, the indicators. The truth of it is, and I'm biased, of course, but I think the big three squeeze. I think the indicator I built is just like really, really freaking solid. This indicator and every other indicator, right? They're completely useless if you can't manage the emotions. So again, coming into this year, that was kind of my number one goal. Always trying to refine the process, always trying to improve the signals, improve the setups. But this year, really put a lot more time into figuring out like what makes me tick. Like, why do I think the way that I think? If a trade's coming against me, why do I react the way that I react? All right, why do I go through that justification? And again, that book, Best Loser Wins, that's been really helpful this year. All right, and the biggest thing for me is just shifting my relationship with losing trades. It's so easy you take a trade. Like, for example, we got some calls here on ON. This trade happens to be working. But it's so easy to pull the trigger on ON. And then to an extent, like your entire existence becomes about that one trade. Like that one trade, that one setup is a trader that becomes like your world. Like you're walking around with the results of that trade strapped to your chest. So we have this tendency to make every trade a huge ordeal. And that's where, hey, if that huge ordeal's not working, you start playing the but game. But I've got time till expiration. But, the market is so strong. Maybe it pulls back. Maybe it bounces off of the 50. What's been super helpful for me is just a simple process of every trade that I take, I'm going to take a screenshot. All right, let me pull up an example from Microsoft this morning. So yesterday we bought some Microsoft in the Mastery, and then this morning we bought some in the options room. So let me go grab the screenshot. But I suggest each of you do these two things. And maybe you can prove me wrong. There's 170 of you here in the free room. I'm sure we got a decent crowd going on YouTube. I'm willing to bet not too many of you are going to go and do these two things. So hopefully you can prove me wrong. But the first thing is go grab that book. All right, paperback, hardcover, get the Audible. I'm a fan of the Audible. Then the second thing is just get some kind of like screenshot software. If you use Windows, you got the old, the old faithful snipping tool. But here's what you want to do. So every single trade you take that screenshot. And like I always advocate to you guys, right? Have your go-to indicators. Have your momentum tools, have your structure tools, and whatever your go-to trade is. Like for me, you guys know I love trading these daily squeezes. Even if you don't use my indicator, go back and study that exact trade over and over and over again. Like if you're a fan of trading the daily squeeze, this weekend, right, little 4th of July project, go find as many daily squeezes that have already happened and study them with as much detail as you can. And I think what you want to study is, what does that squeeze look like before and during that big push on your indicators across lower time frames? So say your favorite indicator is the 10x bars. What you're going to find is that daily squeeze tends to look the same every single time on your 10x bars on your lower time frames. Like there's that repeatable pattern time and time again. So understanding that pattern, right, having a good sense of what should the template look like, when you pull the trigger, take that screenshot, and now right in front of you, you've got your reasons for taking the trade. So with my style of trading, my indicators, we're getting long Microsoft because we have a daily squeeze. We're above the 21 EMA. And my trigger here for the entry is that 2 hour, 1 hour, 30-minute, 15-minute, 5-minute buy signal. For me, that's my high probability moment in time. As long as the indicators are bullish, right? As long as it's that high probability moment in time, I'm going to hang on to that trade. But as soon as my reasons for taking the trade, right? As soon as my ABCs start to vanish, I've got to immediately come to the realization, now my cash is tied up in the setup that is no longer that high probability moment in time. And for me and my style of trading, that's all going to change against me way before Microsoft's taking out 330, right? Way before we're coming down here and testing the 50 SMA. And that was the same case in the past. But like most folks, I wouldn't want to realize the loss, right? I wouldn't want to accept the fact that I took a trade, the trade didn't work, right? I would make that trade a huge ordeal. All my reasons for taking the trade might disappear at 330. I would still find myself holding that trade down at 320. Right? I might find myself still holding that trade in a break of the 50. And I go back, I look at all my painful losses. It was the same thing time and time again. My painful losses haven't come as a result of, hey, I bought some calls on Microsoft. The following day, you had a big downgrade, and the stock gap down 5%. Now that does happen, but the losing trades turn into big losing trades because of that justification game. Versus saying, hey, I've got to take as many good setups as I can to move the ball forward. All right, I've got to welcome that cost of doing business to actually run a profitable business. All right, a losing trade is not a huge ordeal. I got to take those losing trades to figure out which ones are going to be the winners. And at first, it's not the easiest thing because it goes against human nature. All right, there's the whole mystery of, all right, even though this is kind of going to shit, all right, and all my reasons for taking the trade have disappeared, what if I take it off right now and tomorrow it gaps up? All right, what if I get shaken out? What if I leave money on the table? Those are the voices I think most of us hear when it comes time to cut that trade off. And again, while it's not the easiest thing at first, I think what you'll quickly find is just incredibly gratifying is getting in the habit of saying, hey, have my reasons for taking this trade disappeared? Yes, they have. Okay, well, I don't care how much time I have left till expiration. I don't care if I got short puts all the way down at 290. I'm going to try to put my cash to work as frequently as possible when it's my high probability moment in time. I want to be ruthless, like maybe even borderline a little bit too quick to take the trades off when they're not doing what they should. And I think something as simple as taking that screenshot makes that so much easier. Because now, guess what? And for me, guys, even better, right? I'm doing it in a public setting. When I post a trade alert for Microsoft, we take our screenshot, we identify our reasons for taking the trade, putting aside a gap down. We should not be in that trade at 330. The whole thinking here is, hey, here's a moment in time. We got the squeeze, we got the buy signals. And based on all the studying that we've done of previous squeezes, this is the combination that should quickly send Microsoft to the upside. Poking its head back under that daily 21. Couple sell signals coming in. I'm already wrong. And the toughest thing to do, but the most important thing to do at that point in time is say, hey, I have no idea what happens next. This might turn around 15 seconds after I take it off and explode. But right now, my cash is tied up in a position that no longer fits my template for that high probability moment in time. And if you have that screenshot in front of you and you keep it on your desktop, I'm going to feel pretty stupid If Microsoft's fading back, we're down here at 320, and I'm still holding that trade, when these are my reasons for taking the trade. And what that's done for me, guys, is the inability to accept the loss, right? The inability to take it off when you should take it off, right? When it's just no longer perfect. What that used to do to me in the past was put me in a position where I have to crank out a really high win rate, right? Because I'm not taking my losses off quickly. My losing trades are bigger than they should be, right? They're eating into my winning trades. Now I've got to shoot like 70% because of the relationship between the winners and the losses. The last handful of months, as I've gotten better at this mindset shift, in my small account here, my win rate might be like 40, 50%. I don't need to be on the money every trade, right? I don't need that high level batting average. I'm moving the ball forward rapidly with a lesser win rate because of the relationship between the wins and the losses. And for me, it's been like this total paradigm shift. I mean, if anything, what I might need to get a little bit better at is maybe being a little bit more patient. We had some calls earlier this week in MasterCard. On Wednesday, MasterCard pulled back. The 5-minute chart printed a sell signal. The 15-minute chart printed a sell signal. The 30-minute went neutral. The 1 hour went neutral. I'm sitting there at that point pretty much at like break even. Our calls are down like 5-10%. Now, I have no flipping clue what MasterCard's going to do next. But at that moment in time, it's not doing what it should do. Right? At that moment in time, if I didn't already have the position, I probably wouldn't take it just yet. So I took the trade off. Lo and behold, the following day at the open, everything shifted back to the bulls, and off you go. Right? Most people have a fear of that. It's just human nature. Most of us, by default, we can't live with the idea of what the hell, man. I took the trade off, and then, damn it, they shook me out. Well, here's another example. We had a short in EOG, very open yesterday. So like right at like, we'll call it 112. All of my reasons for taking the short disappeared. I have no idea where EOG goes next. But what I do know, as of that moment in time, it's no longer that high probability short setup. Was I a little bit too quick in MasterCard? Maybe. Had I held on to MasterCard, been a little bit more patient, would that have been another winning trade? Yeah. But if I played that same game on EOG, I'm getting smacked all day yesterday. And now my trade is basically busted. Now, if this thing doesn't pull back immediately, I'm looking at a max loss. Guess what that max loss does? It robs me of the profits from a trade like ON. ON didn't give me any problems. We traded Pinterest last week, in on Tuesday, out on Wednesday. We traded Mara. We're in, we're out. So kind of like combine all those things together where I think you want to have a really strict laser focus on a high probability A+ kind of setup. And what I'm a huge advocate of is try to become a specialist. Like, I'm not trying to become good at everything. I'm trying to become one of the best at just trading the squeeze. That's all I'm trying to focus on. And now with that laser focus, I can go back and really get like just super familiar with what things should look like. You take your path of least resistance indicators, you study what they look like from the ground up before and during that daily squeeze. You get that pattern recognition template. So I have zero hesitation this morning to say, hey, options room, let's buy some Microsoft. Because from every daily squeeze that I've studied, this is usually what the beginning of it looks like. But then I'm going to manage the risk in a fashion here where I don't need these to work every time. And to me, that's been a powerful combination where by default, because the setups are high quality and because we're waiting for that really specific moment in time where like everything's lined up, they certainly do tend to work way more often than they don't. But I'm being so ruthless with the risk management that even if 30% of them work, I still think I can make a little bit of headway. So any questions on that, guys? But again, I suggest you do those few things. Grab the book. To me, it's been incredibly helpful. Then get in the habit of taking screenshots for every trade you take. Do that at night, right? Do that when you're not in the heat of battle during the open market. Right? Before you go to bed, say, hey, I bought Microsoft because of A, B, C. It doesn't make any logical sense to hold on to this trade if I lose my A, my B, and my C. But like I mentioned earlier, that was all my painful losing trades. Like all the trades that made life stressful, they didn't have to be that way. I didn't get caught in some huge gap down. I didn't get caught with my pants down. I took a trade. My reasons disappeared. But because I'm a human being, right, I'm going to justify holding on to this trade. And in a nutshell, guys, that's why trading is really difficult. Amongst other things, there it is in a nutshell. To excel at trading, you have to go against human nature. And frankly, I kind of sucked at that for like 8 or 9 years. So any questions at any of that, feel free to throw it at me. But I hope next time I see you guys, I heard a few of you got the book. Hope to see some more screenshots getting thrown out there. And it's not easy at first, but I think, at least for me, the more I did it, it's like, all right, this trade's not working. It's uncomfortable to take it off right now. What if I get shaken out here? You do it once, you do it twice. The more you do it, it starts to feel pretty damn good. Like for me, I truly felt like, hey, this is a huge turning point in my trading. Like I'm getting over that hump that is so difficult for most of us to get over, right? That the setups are easy. If you can see the color green, you can trade my go-to setup. Like even my wife, I was showing my wife the charts a few nights ago. Like she gets it. Get a blue dot down here, get a green bar up here. Stock should go higher. None of it's overly complicated, but the human brain is mighty complicated. Before I do some Q&A here, guys, let me just breeze through these charts real quick. This market's just super strong. Super strong. I've got to show you guys since I got you here. And we'll talk more about this on Monday. Look at this thing. I think this is like the biggest setup in the entire market right now. It's my favorite setup in the world on the biggest stock in the world on the biggest time frame. A monthly bull squeeze in Apple. This is serious stuff, guys. Right? Apple's your most heavily weighted name. Right? The king of the hill. That's a super powerful setup. You look at that like you would look at a 15-minute squeeze. Right? If that fires, and if it works as advertised, you should get 6 to 8 to 10 bars of momentum. That's how 5-minute squeezes work. It's how 15-minute squeezes work, hourly squeezes. This bad boy's on the monthly chart. And for now, you have every indication that over time it does want to fire to the upside. Yeah, we're talking like Apple to 220. Now, more important here, if this does fire long, I think there's going to be a huge domino effect on the monthly squeeze here in the S&P 500. Check this guy out. If that's a 5-minute chart in front of me, and we're in a 5-minute uptrend, right? We've held our pullbacks to the 50. The squeeze is printed. We're back above the 21. And every time frame inside of that is bullish. All right, the weekly is bullish, the 3-day. I have to think that squeeze wants to fire to the upside. What I think is going to nudge that squeeze to potentially want to do that is the monthly squeeze in Apple. Like just based on the weighting, it'd be physically difficult for the S&Ps to not trade higher if Apple actually fires that monthly squeeze. So that's just kind of bigger picture, but that's where I think we're headed. I think we might be going back towards those highs. Not without pullbacks, of course, but I think it's all shaping up. All right. Let me check my open trades here, then we'll do some Q&A. I'll show you guys what we're working with here. So I mentioned we took off our EOG short yesterday. And by doing that, we avoided some additional spanking. And then this morning, we took off our short in First Solar. Nice exit, guys. Yeah, we took this thing off down at like 188. So avoided some headaches on that one. We're long ON. ON has a nice daily squeeze and a nice weekly squeeze. Buy signals on every time frame. We're long some Microsoft. Microsoft setting up in that daily squeeze, and then we are long some UNP. UNP is squeeze city right now. 15-minute, 30-minute, 4-hour daily, and the 2-day. So that's what we got for posted trades, and then all on my lonesome. Picked up some NVIDIA the other morning, and Netflix. But all right, guys, Q&A time. Wow, S&P's 4450. Look at this sicko. So that might have been it, guys. That might have been the pullback. The generational buying opportunity of June 2023. If you didn't buy that dip, your great-grandchildren will blame you for for your family tree not being rich. Oh, yeah. So, guys, Mears, I think it's, 30% off? Yeah, so keep that in mind, guys. We got a nice little 4th of July sale going on right now. Let's go check that out together here. Let's see, who do they got on the front page this month? You know, I've only made the front page of simplertrading.com a couple of times. For whatever reason, I keep putting this John guy up here. Trying to figure out what the big deal is with this guy. But yeah, so 30% off memberships, courses, and indicators. Not too shabby. Not too shabby. All right, Maruf wants to take a look at some Oracle. God, these S&Ps are just doing terrible things to the shorts. It all looks really good, right? No problems, good structure. You have your buy signals, you held your pullback. You know, these are all positives, and that all kind of points towards this might want to just go on and continue this trend. Admittedly, though, where I sometimes struggle a little bit as far as the entry, Is but I don't have a bunch of squeezes flashing down here. And keep in mind, I'm not looking just solely for a squeeze. I'm looking for a combination of a squeeze and one of my buy signals. So when I look at ON, there's the marriage of those two things. So the squeeze just simply tells us, hey, the stock is gearing up energy, all right, building up energy, getting ready for its next big push. All of the buy signals tell me, yeah, it probably wants to fire to the upside. So I'd probably look for, probably wait until a few squeezes come into Oracle. Lila. I like that name a lot. Not to be weird. It's just probably a little bit weird. I'm going to write your name down. My wife and I hope to, start a family here sometime soon. So we're kind of playing the whole name game. Now, my wife's name also happens to be Taylor. So you got two Taylors. So naturally, I'm trying to advocate for, we got to name one of our kids Taylor. Feels like a missed opportunity to me, but she's not about it. But Lila is a very pretty name. Lila, Tesla's it's a beast. It's a similar pattern here, guys, where everything made a huge push. All right, very explosive month of May. Everything kind of worked back towards that 21 EMA. Saw that in the S&Ps. You saw that in the QQQ. You got that from your Microsofts, Teslas. And now everything just points towards we're off to the races here. So from that point, I think it's just as simple as, do you have a good entry and do you have a good trigger for that entry? But at the moment, no signs of Tesla stopping here. So very much like the S&Ps, that might have been it. Squeeze fires, big push. There's your first back test. Tesla passes that test with flying colors. Now you're looking for a path here back to and potentially through those highs. Now here's the real kicker. Here's where Tesla gets really spicy. Oh, it actually gets a little bit better than I thought. So as of this week, the weekly chart goes bullish. All right, so the big three indicator gets a buy signal. And interestingly enough, not that history necessarily has to repeat itself, last time you got a fresh weekly buy signal was back here after the weekly squeeze fired. Now, before that weekly squeeze fired, Tesla had already made a nice move. All right, back here you're going 180 to 240. Then the squeeze fires takes you another 150, 180 bucks. So I'm not necessarily calling for a push back towards 400. But from that point of view, it is pretty similar. But in the short term, more importantly, when a squeeze works as advertised, you tend to get that 6 to 8 plus bars of momentum. From that point of view, this is all pretty fresh here. You're only 3 weeks in. So a fresh weekly squeeze that just fired. You're coming off your first true back test, right, of that daily 21. And the indicators here are pretty much as bullish as possible. So I don't see this bad boy slumming just yet. Tesla's been pretty solid here out of the 15-minute end of day squeezes. So check this out, like that whole initial push off that 21. For a few weeks there, it was kind of like taking candy from a baby. Find a 15-minute squeeze into the close, buy some calls. Following morning, you heat up your coffee and you pick up your paycheck. Like over and over and over again. It was really impressive. So perhaps a 15-minute squeeze again today. But Tesla looking really strong here. Jim, thoughts on Datadog? Nice, 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 nice. If they can break through, it's a pretty clear level, right? $100. $100 has been recent resistance. Definitely a big psychological level, and it's also your 200 SMA on that 2-day squeeze. Through that level, they should get a nice push going. Got a weekly buy signal, 2-hour, 1-hour, 30-minute, 15-minute. So right now, inside that daily squeeze, you got the fixins here for a nice push higher. That looks a little bit like Shopify. Snowflake is somewhat similar. Yeah, I like Datadog. I like it. Yeah, Taylor cubed. And live, it looks like Mirza's got you hooked up with the link there. Thanks for your help there, Mirza. So Dr. Bob, I think I heard today Apple is was it 3 or 4 trillion? It's a little bit higher now than it was about a half hour ago. Somebody said it in the Golden Room earlier. It's like 3 or 4 trillion, some number that I can't quite wrap my mind around. That's a crap load of zeros. I'd imagine Warren Buffett is probably having a pretty decent Friday. Not a bad Friday for Uncle Warren. Yeah, so the book is, I'll put the link here in the chat for you. The Best Loser Wins by Tom Hugard. And that was a mental shift for me. Like, hey, let me start to take pride in how I handle my losing trades. Like, kind of shift that whole mindset from, oh my God, I got a losing trade to, hey, I pulled the trigger. I pulled the trigger exactly when I should have, exactly where I should have. And now my reasons for the trade are disappearing, and I'm taking it off. It's like the easiest, hardest thing to do. As NVIDIA just continues to push into the stratosphere. And then for the good people on YouTube, let's get that posted up here as well. And then Eli on YouTube wants to look at some Netflix. Again, all very similar. Huge push out of your daily squeeze. Here's your first real back test. It passes with flying colors. You held your 21, bunch of buy signals. If I didn't know any better, I would say Netflix wants to take out that 450. In due time. I mean, frankly, guys, what I think could be the case here, and as always, we'll just keep on trading the charts in front of us. But I've kind of got the expectation this action continues into earnings. So it's like mid to late July. We're getting Netflix earnings, and you start getting the Apples, Amazons, etc. So there might be no stopping this thing until then. Possibly. I'm here for it though. Okay, Apple's 3 trillion. Yeah, that's a big number. That's a big number. But all right, guys, all right, I think I'm all caught up on the questions here. So again, grab that book. If you're cheap like I am, I think you can do a trial on Audible and download the audiobook. with your free trial. So there's always that option. But check that book out and then screenshot every trade you take. Your goal should be you got a folder on your desk, right? December 31st comes rolling around, and before you're out there celebrating the ball dropping, you want to go through all the charts in your folder, right? All the trades you've compiled this year. And I think you want to see three things. One, you were pulling the trigger on nothing but high quality, high probability setups. Two, you took your profits where you should take the profits, right? You're not being a pig. And then the most important, right, the one that screws everything if you can't get it right, those ABCs start to disappear. Take that trade off. And I think for a lot of you, like me, you'll find that's it's kind of a big turning point in your trading career. Think you will find the same thing. But all right, folks, I'm gonna let you go here. I gotta do the Friday newsletter video, so I'm gonna bang that out. And then just remember, next week is half day on Monday, and then we are closed up on Tuesday and back to it on Wednesday. But as always, thank you all for your time. We appreciate you being a part of the community here in the trading rooms. For those of y'all tuning in on YouTube, appreciate you guys checking it out, and I'll talk to you soon. Adios, everyone.